Welcome back. A short time ago, we heard from Team Trump in the U.S. that, in fact, the 25% across-the-board tariff is being lifted on trade-compliant products from Canada. What does that mean? It means that if things have already been approved under the most recent trade agreement to go back and forth across the border and they meet that standard, they will not be tariffed by 25%. However, we know there are usually little cutouts and carve-outs and stipulations that sometimes come out later from the U.S., so we're waiting for some of the details just for clarity. But first, let's bring into a conversation Moritz Steinbauer, Senior Vice President at Morningstar DBRS. Your portfolio looks at canola. Your expertise is in canola. Let me talk about whether it's clear to you whether canola makes the cut and has the tariff dropped.
Yeah, I think most of the agricultural products should make the cut, but I think it almost feels like a déjà vu to a month ago. You know, we thought there were tariffs, and there were no tariffs, and now we're back to, I guess, waiting for April 2 and see what happens. So back in limbo, and of course, limbo and uncertainty is not ideal for the market and the supply chain.
What has that been like for the people that you talk to who are in the industry and trying to sort of stake out a place to be safe?
Yeah, I mean, it's challenging, right? So about 95% of our canola oil goes to the U.S., about 65% of our canola meal goes to the U.S. We're talking sort of $8 billion in trade value. So it's a big chunk of the canola supply chain going to the U.S. And having this uncertainty and unpredictability in terms of U.S. tariffs makes it very challenging. You know, do we stick with the U.S.? Do we have to look for other places for the canola to go? And all that uncertainty is certainly, not helping. Are
there alternatives for the American market?
So it's interesting. To certain agricultural products, like for example, oats, we export about 90 or 80% of our oats go to the U.S., makes up about 95% of their imports. They're pretty reliant on our oats. There's not many, oat exporting nations that could fill the void if, Canadian oats are sort of priced out of the market. So probably U.S. customers kind of have to, swallow the pill and pay the premium for higher oat prices if there were tariffs. With canola, it's a little bit different. Canola, there is a substitute of soybean-based products. So U.S. customers could turn to soybean-based products. But if they do, of course, they would be consuming more of that, and that could open the door for, Canadian canola elsewhere in the world. Right now, the U.S. is exporting quite a bit of soybean to China. Of course, the U.S. and China have their own issue in terms of tariffs. So maybe, there's a scenario where the U.S. uses more soybean. That opens up maybe a market in China where then, Canada could step into.
Okay. So what it looks like is the U.S. administration wants to make sure that everything is, quote unquote, trade compliant. And if it's trade compliant, then yes, the tariffs will disappear. What does that mean for your industry? And is most of the industry trade compliant?
It should be, yeah. But of course, again, we go back to the point of, that's our understanding right now and today. And as we've seen over the last couple of weeks or months, it's a very fluid change, and we don't really know what tomorrow holds.
Okay, so trade compliant meant one thing when the deal was signed, and it's not necessarily what it means today?
Exactly, yeah, or tomorrow. Yeah.
Or tomorrow, okay. So we're waiting for clarity on that. You mentioned that the U.S. can turn to other products like soybean-based products. And I'm wondering, besides China, is there another market that Canada can turn to sell if they need to make that pivot? How difficult or easy would that be to do?
Yeah, it's interesting. So it's possible, but it's not easy. So, just the quantities that we're talking. So, for example, canola oil, we're talking like over 3 million tons that are going to the U.S. Same for canola meal. So it's very large quantities. So in a scenario where a U.S. tariff is, for example, pricing, canola oil or meal out of the U.S. market, all that volume has to go somewhere else. So rather than moving it south of the border, we have to move it to the ports on either coast to maybe go to China or go to Europe. But our port facilities have to be able to handle that type of volume, and that may not always be the case, and we might, face a bottleneck, which makes it very difficult. But it is possible for our canola to find a home elsewhere in the world as sort of trade flows rebalance, and that is sort of our baseline expectations, that initially we'll be facing a lot of volatility or uncertainty, but over time, the trade flows will redistribute.
For the last 48 hours, of course, there was a 25% tariff, which you were trying to, I guess, digest. What did that digestion look like? Was the idea that it would be passed on to the consumer, the raise in prices? Was the idea that you perhaps not ship as much to the U.S.? I mean, how were you trying to deal with that?
Yeah, I think, the silver lining here is that it has only been such a short time. A lot of that, and we knew it was coming, right? This is not, we had it a month ago. We had this deadline coming up. So shippers were able to pre-ship and prepare for what's coming. I think it's more so if this, on April 2nd or, whenever they do come back and then they're back for an extended period, I think that's when things really start to become challenging.
So there was a concerted effort to pre-ship and avoid tariffs?
Yeah, and I think also if you think about there's the Chinese trade probe that has been going on since September. So I think the silver lining in both the issues with the U.S. and China is that in comparison to maybe some, prior trade actions like the 2019 action by China that sort of was sprung overnight, here we're looking at trade actions where we have some sight lines and are able to prepare to some extent.
Well, it's funny you say you have sight line because I think most people are like, getting whiplash, that, because that sightline does change sort of constantly. You mentioned China and what happened in 2019 when they did sort of stop some canola exports or allowing in Canadian imports. What did that look like? Remind us how the industry was affected by that.
Sure. So back in 2019, China put a ban on 2 Canadian companies to export canola seed at the time to China. That ban was in place from 2019 to 2022. But I think the important point here is that over that time, total Canadian canola seed exports didn't really drop. Of course, China had to look for other sources of canola seed. That opened up the European market for the Canadian exporters so that our total volumes remained relatively the same. However, over that period, that near-term volatility and the costs associated with moving to a different market, the Canola Council of Canada estimates still sort of cost the industry upwards of $2 billion. So
I was going to say, what was your key takeaway from that time? What was the lesson learned?
The lesson learned is certainly diversification of, customer base as well as infrastructure on both, ports or into the U.S. But at the same time, it is, again, that it doesn't come, it's not free. It's certainly a costly shift to move the supply chain.
I have to say, it was a bad thing at that point, but if we learned the lessons that we needed to learn, it puts you in a better position right now.
Absolutely, yes.
Got it. Moritz, thanks for coming in. Appreciate your time.
Thank you so much for having me.
All right, coming up next.